ahead and get started here. And we're going to be talking about implementing technology into your real estate acquisitions process. And just as a way of introduction again, for those who jumped on after we started, my name is Brandon Abbott, managing partner at PassiveInvesting.com, one of the managing partners. And with me today also is Chris Neary and Eric Fitzgerald. Chris Neary is based in Charleston, and Eric is based in Charlotte. And the three of us together are the acquisitions arm of PassiveInvesting.com. And we're going to be talking today about how to implement technology in your process. So this is something that we have implemented recently within this past, I would say within the past quarter, really looking at our process and how to streamline it, how to become the most efficient at what we do. Because when we become more efficient, we can cycle through more deals and therefore win more deals is the idea behind that. So I'm going to let each Chris and Eric just give a little introduction, just a few lines about kind of your background and where you come from and kind of what you do for fun. So Eric, I'm going to let you start.
Sure. Yeah. Thanks, Brandon. Like you said, my name's Eric Fitzgerald. I'm the director of acquisitions for PassiveInvesting.com. I'm from Pennsylvania, moved here to Charlotte a little bit before the pandemic in 2019. So kind of got down here and worked in property management back in Pennsylvania, and then got an analyst role, and then worked for a family office in acquisitions for the Southeast. Kind of knew Brandon, Dan, and Danny for a little while now, actually through this platform, and joined up with them in February, and we've been pretty active, Chris, Brandon, and I, and on the acquisitions team. So yeah, it's a little bit.
All right, Chris, you want to
share a little bit? Thanks, Brandon and Eric. Yeah, of course. So I'm Chris Neary. I'm from New York. I've been in Charleston for about 5 years now, and that's where I met Danny, who resides also in Charleston. I'm the acquisition associate for PassiveInvesting.com. I started back in March of 2020 as an analyst part-time, and that kind of evolved into my position now. And right as Eric said, we work as a team and on the acquisition side.
Awesome. Yeah. And one thing that I think Eric and Chris can attest to is that we like to, we don't like to micromanage. We like everybody to be involved. We like, there are people that are better at things than I am, and we definitely don't want to stifle anybody's creative ability. So one thing that we do is we have regular meetings. We have weekly calls. Sometimes those get missed just because of things that are going on, but we try to have weekly calls to discuss the deal flow and discuss the process. And then we've had some in-person meetings and, just sit down and run through the process. What are some things that we're missing? What are some things that we can do better? And these are some of the things that we have up on our points of the talk today. So, to tech or not to tech, that is the question. Look for redundant tasks, identify bottlenecks in your process. Should you do it yourself? How to use innovation for your success, and so much more. So to tech or not to tech, that is the question. So I'm going to stop the screen share for right now so we can kind of just kind of have a panel. And if you have questions as we're talking, please feel free to put those in the Q&A box or in the chat, preferably the Q&A box, so I can kind of check through those. And just feel free to pop those up, and we'll try to get to those at the end, unless I see something that's pertinent to what we're talking about at the moment. So Eric, kind of what is your take on technology, in the current market, and how does it affect your ability to be competitive?
Yeah, certainly the market is competitive in and of itself, with or without technology. So I think technology has helped us gain a little bit more of a competitive edge in the current market conditions. So I think we calculated our rate of each deal we get compared to how many deals we underwrite. I forget what it was, but it's probably 80 to 100 deals that we'll thoroughly underwrite and kind of look at before we get a deal. And technology has really helped us cycle through, that many deals to be able to win the few that we have this year. So whether it be, services like Red IQ, which we can get into a little bit later, a CRM that we use, I don't think that we would have won as many deals as we have if we didn't have the kind of technology that we've worked pretty hard on.
Yeah, and Chris, kind of speak to that on the technology side. How does that help? Like looking at future deals, or like having a database of information that you've stored up, using whatever platform you're using. How does that help you underwriting future deals that you get?
Absolutely. So just basing off what Eric said, he was looking for that number. That number was about 1.5%. So of 100 deals, we get about 1.5 on average. So, and that's just in the multifamily side of things. But yeah, of course. So storing all this information in one spot with the technology that we use actually benefits us for future deals. So it helps us with market analysis, specific market analysis. That is, we have a map where of all of our past deals where we can check specific counties or tax rates or things of that matter. So storing all this information with the technology really helps benefit for down the line future work. So for an example, I used something yesterday where I was able to look at a specific county that we really haven't touched upon, and it helped a lot with kind of eliminating that time looking for that specific answer.
Yeah, and it allows us with the platform that we use, which is called Monday, for our pipeline or our deal flow. We do that, and we can collaborate within that platform. We can put notes on specific files. There's mapping capabilities. And we have a whole pipeline, which we're going to show you. This is a duplicate of what we use, because we can't really show you our specific deal flow because we've signed confidentiality agreements on those, but we've duplicated it to just kind of show you how we've built that out to date. And this is a constant, this is a live entity. It's something that changes constantly. So we're always adding and changing things. And another thing we're going to be talking about is Red IQ. So we have two areas of technology that we're talking about. One is our platform for pipeline, and one is our platform for underwriting. And with the underwriting, the biggest problem that we ran into was, not that I ran into, but that we ran into as a team, was data entry, right? So, if, Eric or Chris are just plugging in numbers, that's, the formats are very similar, the buckets are very similar, so it's a redundant task. And that's something that we're always looking for when we're talking about technology. Is there something we're always doing on every single deal that we can streamline? And that's the way you want to always look at any process. Where are the redundancies? And when you find redundancies, then you can find streamlines. On average, Chris, what would you say the time saving is from manual entry to using like a Red IQ data entry?
It's tremendous. I would say on average about 1.5 hours, 2 hours is the difference of time savings per deal. So and it also helps with seeing how many deals we can actually analyze. So with that time, I can triple the amount of deals we can look at and vet and either proceed or not proceed.
Yeah, Eric, and can you talk about, there was one instance where we were down in Jacksonville and we toured a deal, and we got some guidance on it, and we were implementing our technology. I think can you tell the story about that? I think it was the deal just closed. Newmark had it listed. I'm not going to say the name of it, but I think you know which one I'm talking about. We sat in the car, the three of us, and we underwrote that deal. Can you kind of tell that story about like how fast we had it back out? Got pricing, called the management company and all that?
Yeah, I think it was within the hour, and it's really good for us because it's saving us the time, but it's even better for the relationships with the brokers. After we toured that deal, when we're able to turn around kind of where we're at in pricing, we already have fully vetted the financials. We've already gotten in touch with our property management company to kind of confirm our pro forma. That's really, really powerful. And that's, although we didn't win that deal, we can certainly win other deals by turning around financials that quick. And we've been able to do that on other deals as well. As just kind of, if one comes in, we'll push it to the front of our pipeline, and we turn that around, within an hour, and we're ready to go.
Well, and it's also speed of disqualifying deals. So that's not one that ended up working out, and we ended up disqualifying it. But the sooner we can get it off our plate, the sooner we can focus on a deal that does work for us. So, you know, the speed of which you can analyze something, whether we end up purchasing it or not, definitely helps us increase the speed of our pipeline, or the velocity of our pipeline, if you will. And then let's talk about some of the bottlenecks that we ran into. And again, this is all leading up to, we're going to show you some of the technology that we use, some of the bottlenecks that we were running into. And, you know, one of the things that we did when we sat down is like, okay, whose responsibility is it to do X, Y, or Z? You know, when a deal comes in, and we wrote this all down on, you know, we had an electronic whiteboard, again, using technology, and we could save that, we could send it to, you know, so we were using technology, even working through our process. But, you know, we just run through the entire process all the way from beginning to end. Okay, a deal comes in, where is it going to come into? So we set up a specific email box for the deal flow, and we named it, you know, multifamily acquisitions, you know, and we can all three see that. Actually, the whole team can see that. And that's where we force all pipeline, and we, you know, keep that very clean. And that's Chris monitors that. And that we said, okay, that's Chris's job. And when a deal comes in, he signs in, he signs the confidentiality agreement, gets the financials, he uploads them to the system, to Red IQ, gets and into Monday. And then he also is emailing the broker and asking for guidance and call for offer state. And that's something we had to hash out, because it's like, okay, does Eric is broker relations, so is he the one that needs to be contacting the broker, or is Chris the one? And that's something we changed early on. We started out, you know, with Eric doing it because he was broker relations, and so that was technically would fall under his job. But it became a bottleneck, because Chris would get it in, and then he'd have to email Eric to ask Eric, you know, here's a new one, hey, can you ask for guidance? And then Eric would have to ask for guidance, and then he was having to check up on it while he's trying to work on a deal that we already have guidance on. So we went back and said, okay, is this working or is this not working? And we said, okay, let's just have Chris make that initial contact. That also gives Chris exposure to the brokers. And even this morning, we changed our process. We're like, okay, from now on, when we send that email out, ask for guidance, we want all three of us on the email. That way, we've all seen it go out. So if I go into Monday and I see we don't have a price on, I can search my email and see, okay, he sent this email. I can go ahead and reply to that. Hey, Mr. Broker, what's going on? Can you get us a price on this? Because we want to buy this deal, you know? And, you know, that follow-up, it allows all three of us to make sure we're getting that pricing in a timely manner. So constantly assessing your process and looking for bottlenecks, and deciding who it is that's responsible for each task is very important. And that frees it up. So Eric, to, you know, talk about, you know, how things have morphed, and, you know, like touring, being able to tour deals now. And, you know, while, you know, Chris is able to be working on underwriting, even while you're maybe in Texas or in Florida or wherever we're, you know, touring a deal, you can be collaborating with him and he's underwriting and working on it. Just talk about how that's helped increase our efficiency and being able to look at more deals.
Yeah, it's been awesome. You always want to go into a tour informed, and you want to be able to ask the right questions. And a lot of times, if you're really packing in tours, you know, on a certain day, if I'm traveling to Texas, if I'm doing all the work to get there, you might as well try to pack everything in, you know, hour by hour. And there isn't really time in between those to get really familiar with the next deal, underwrite the next deal, and kind of have informed questions for the broker as you're touring, because you want to kind of get all your questions answered while you have them there. So what we've been able to do is Chris does a great job of getting, you know, 3, 4, 5 versions of underwriting done on a deal before we even ever go see it. So all it takes is a quick review. You know, everything is pretty standardized. There might be 2 or 3 things that stand out. So like, I'll ask the broker on the tour, hey, do they have a cable contract? What's their concessions look like? And so those kind of things you can pick out on the underwriting and be like, okay, these are the questions I'm going to ask. And once we have those questions answered after the tour, we're pretty fully vetted on that deal. So, you know, always want to go into a tour informed, and that helps us do that.
Yep, exactly. All right, so let's go ahead and jump into it. Before we jump into to actually showing you, does anybody have any questions about what we talked about so far? Anything at all? You know, just go ahead and put that in the Q&A and we'll answer those. But I'm going to let Chris share his screen. Let's go ahead and start with Monday and kind of talk about the system we use for our pipeline. So there's many systems out there. This may not be the best. It's what we like to use. We find it to be very intuitive, and it has some build-ins that we like. I think we're really only scratching the surface of what this software can do. Oh, sorry, there's a bug in my way. So I think there's a lot more that we can tap into, but some of the things that are very, very nice on this. So you can see right there, we have an Ascend Waterley deal, which is now actually called Braxton Waterley. But when we were purchasing it, it was called Ascend Waterley. And so you can kind of see how it's put into the deal. And if you want to, you can kind of just scroll slowly. So we have, I'll go back to the first column there. I'm going to just kind of go through this. So we have on or off market. You see that first bucket there on that green. And you say, is it on or off market? So is it fully listed or is it not fully listed? And if it's not fully listed and it's off market, it's going to kick down into its own bucket that's kind of off market, pipeline off market. As soon as you change that to off market, it moves the item down into that. That's how we have, so you can build in automations into the system so it automatically does that. And that just helps us because the off-market deals have a little more urgency to them. And so you want to make sure you get to those quickly. And so that's why we separate those. And then the receive date is the next column that you see. That's automated. So as soon as you put it in, as soon as you start entering the data in for that field for this Ascend Waterley deal, it puts that data in for the date you're entering. So you don't have to manually enter that. And that kind of gives me a tracking because I can kind of see, okay, when was it input? Okay, it was June and they still haven't called for offers. What's going on with this deal? Or, okay, it just came in last week. So maybe that's the reason we haven't received pricing on it, but it gives me a way to kind of judge how old the deal is. And we're constantly monitoring the pipeline on emails to see, when these are coming in and try to get those loaded immediately as soon as we receive the email. The status level, Eric, I'll let you talk a little bit about that, the status level 1, 2, and 3. You want to kind of explain how we have set that up, and Chris, you can chime in as necessary. But Eric, you want to talk about that a little bit?
Yeah, so it's kind of a way so this is a duplicate of the actual board that we use. So normally there's, tens and tens of deals in here. And we want to have a quick way of seeing, okay, what stage is a deal at? Because there's a couple different steps that we like to do. And like Brandon said, we met up in person, kind of went through all these different steps, what all needs to be vetted before we're ready to offer on a deal. So all these levels pertain to certain tasks that Chris or I or Brandon need to do kind of before we go down the pipeline a little bit more. So a level 1 might be just uploaded and maybe a first or second pass underwriting. A level 2 might be a little bit further where we have maybe a rent analysis done on it to kind of see where we can push rents. And a level 3 might be we have a pro forma in from our property manager that we can compare our pro forma to theirs. And we kind of have all these steps written out. So it's just a good kind of quick high level view on, this huge pipeline of database of deals that we keep. Okay, what do we need to keep moving forward? What is almost done? What can we start reviewing, which you see is under the level 3. If it's a level 3 deal, we know, okay, this is more of a review. We've vetted the deal pretty heavily and now we're almost ready to make an offer. Just have to tweak a few things and make sure that myself is reviewing, Brandon's reviewing, the partners are reviewing, and we're ready to offer.
And you can see the flow of the deal all the way through level 1, level 2, level 3. And this is Chris Neary and Eric Fitzgerald review. And so they're going to talk about it together and make sure it's good to go to me. When I get the deal, that I'm going to take it to Dan and Danny because they have different lanes, right? So my lane is acquisitions. Dan's lane is investor relations and marketing. And Danny is more on the financial side and asset management. So they don't want to be burdened all the time with, looking at deals that aren't going to work out. So we want to make sure it's been vetted all the way out. So by the time I'm bringing a deal for them to look at, we're ready to submit an LOI on that. And sometimes we'll even submit the LOIs prior to their review if I've reviewed it. but it depends. If there's, non-refundable earnest money, that's, we always review that, all three of us together. And then you see past that, LOI submitted, best and final, closed and won, closed loss, closed decline, or due diligence. So closed won obviously means we won the deal, and that's going to move to the due diligence section. Closed loss means we submitted on it, but we did not win it. Closed decline means we're kicking it out because it didn't work. So there, we want to keep those separated, because when the deals are going to come back on market that were already on market, we've already seen that, or deals that were off market and then they become fully listed, and we already have them in our database. And so we can go back and say, okay, why did we lose this deal, or did we decline this deal? And we can go back and look at our notes, and then we have, if you want to click on that little conversation, you can go and you can write updates, and you can have all the notes right there about where, all the different changes, and kind of write in what different things went on with the file, why we didn't like it. That's one thing that we always put in, is why a deal was declined. Why did we say no to it? Or why did we lose it? Couldn't get to pricing, or, it ended up running well above, market, or whatever the case may be. And then Chris, talk a little about that next part there is CoStar. And you want to talk about how CoStar, I know that's technology. You want to talk about how that, how you use CoStar kind of to underwrite deals?
Of course, yeah. So we're actually allowed to have integrations as well. So you have automations, and then you have integrations, which allows you to basically integrate this board with your email, Dropbox, basically anything you can think of. So right here we have CoStar. So we just attach that link, and it'll bring us right to this property. So you don't have to waste that time searching for that exact deal. And CoStar, if you're not familiar, has a combination of basically everything and anything you need on this property. It has tax records, it has demographics for the local area, the unit mix, the past sale, basically everything. And so we use this on every deal, essentially every deal, and it even has some pictures sometimes. So we'll use these hand in hand with our Monday, and it'll just be right here every single time. And actually, this is a great way to look at comparables in the market.
Yeah, I was just going to say, we were just talking about a deal about, rent comps. Like, very quickly we can see, okay, this is like the deal we were talking about, or I sent a note in. I'm not sure if you guys even saw it yet, but it's like, it was a value add deal. It was in the Charlotte submarket. And then if we just go and we click on that, so if you go back to the homepage on CoStar for Braxton and go to comps, and then so it's going to give me, sorry, that's what you were on, rent comps. And then we can just look, so scroll down, we can look at, what the average rents are and vacancy. So we can really quickly, like, let's say it's a value add deal, right? And there's like, oh, well, you can add granite appliances and all this, and but if they're at the top of the market rents, you're spending money for nothing, because they're already achieving top of market rents without doing a value add. So why would you go in and spend $6,000 per unit when they're already at top of market rents? And it's a way that we can automatically determine if there is an upside to the property. So right there, you can see all the price per square foot, or rents per square foot. That's really the number we're looking at. So if ours is significantly lower than the market, then we know we can get, if we're 160 or 158 or 164, whatever the case may be, and the markets are 180 a square foot, then we know we can raise rents. And so that's a very quick way we can tell that this deal has play. And that's something that we do, that we look at on a regular basis. So let's go ahead and let's keep going. So then we have, and that's a great way for if Dan or Danny or anybody else, Brian, our asset manager, if they want to just come and check out the deal real quick, they can jump in here, they can click on the CoStar report, and they can see what's going on. So we list the submarket, the vintage. That's something, because it's very easy for me to just jump in and say, how old is this deal? Where is it located? The address, you can click on the address right there, and it'll take you to the map. And it'll show you exactly where it's located. You can do satellite view. You can scroll in and kind of see what's around it. So it's very, very useful in that sense. to the main table there. And then we got our pricing guidance. So we have that, or Chris has that coded so that when we put in either the price per door or the price, that it gives us one or the other. So if it's $258 per door, which is usually the way that we get pricing, is on a per door basis. And that'll calculate the total overall purchase price, number of units, CFO date, call for offers date, and then due date. And then we have broker feedback. If it's been toured, you can see that check mark. You can see the broker. Now, I don't think that transferred over, but because I'm not sure it's tied to our CRM because it's a duplicate. But basically what we do here is we have a CRM that's also in this. It's a very light CRM. I wouldn't call it, your constant contact CRM, but all it is just a database of our broker list. So we have that broken down per state, and then we assign right there on the broker tab up in the main table, we assign the broker to the deal. So whenever we run across a deal, we can click on the broker in our CRM and see all the deals that we've worked with them on. And I think that becomes very helpful for Eric later on down the road. Eric, talk to me about how, repeat interaction with a broker is helpful in getting a deal closed. Like, let's say the first time you meet a broker and then you keep on running into them on deals until you finally maybe purchase a deal from them. Kind of talk about how that growth process is important.
Yeah, I'll remain kind of general with the specific details, but we've been trying to get into a market in Texas for a little while now. Run into the same team on a couple of deals and toured with them a few different times. I've been down there, Chris has been down there, kind of meeting with them in person, touring deals. And the first kind of meeting, we have, an impressive track record in the Carolinas, but, not as, we don't have as much traction in Texas. So we're kind of getting introduced to these guys all new. We can certainly bring some more references from brokers that we worked in similar firms in the Carolinas to Texas, but we're meeting them for the first time. And so what has been really important for us is consistently reaching out on deals that they are offering. So always reaching out on pricing, on CFO dates, actively underwriting those deals, actively giving feedback, whether good or bad. And actively touring deals. So it takes a lot to travel to Texas, but I was just there last week and we just missed out on a deal with them. So now they feel like we're a serious player and we're, a serious buyer because we have gone almost the distance with them. And so now we're getting off-market deals from them, which they maybe shown to a handful of groups. That are proven buyers. So just a continuous, following up on deals that they're offering. That's the best way to be in contact with them. You're less successful just reaching out and saying, hey, I want to buy multifamily and all that. It's better if you ask them about a specific deal and give them active feedback on that deal and just continuing to do that follow-up.
Yeah, and remembering which deals we worked on, with different teams, that's hard sometimes because we were looking at so many deals. So, like if we get a new deal, oh yeah, this guy, remember we worked on that deal in, the Austin market, or hey, remember, we met her on the tour in, Houston, okay. So that CRM is very, very helpful for that. So moving on, because I know we want to get into Red IQ, which is the underwriting platform. It's going to blow everybody's mind. So underwriting, you can see we've got 14 versions there in the underwriting under the Monday. That's typical. I think usually by the time we purchase a deal, we have about 18, 19 versions of underwriting. Yeah, 18. Oh yeah, it's plus 14 over the 3 you see. So 19 versions on average is what we have before we purchase a deal. And that's, just little tweaks. It's not major, but we'll show you kind of how we're able to do that so quickly. Pro forma, that's going to be from our property management company. So they're going to provide that for us, rent analysis and expenses, payroll expenses, other income and expenses, what they project. Financials, that's from your page. So Chris is going to pull those down from the, after signing the CA. This is all the documents from the property, your rent roll, your trailing 12-month expenses, any tax information, and then you have your OM and your marketing, which is your broker commercial. We pay a little bit of attention to that. It's good to read. We do need to read that, but we don't really base any information off of that. But we can utilize some of the market data from that when we go to market the deal to our investors. And then you see the LOI. We had a few different versions there. This deal we actually preempted, but we did not win the preempt, but ended up winning the deal through full market. So our preempt offer held all the way through to the end, and then we went up one more time right at the end. But you can see, you can add column after column after column, sales columns, images, photos, whatever you want. There is a plethora of data and ways to go about this. You can build all the automations out. So I can build it so, as soon as you click a status change, it kicks it to a new bucket. Like when we say close decline, it kicks it into its own close decline bucket. We don't have to move it down there. We can say, you can say whenever something happens, it's going to email so-and-so. And so you can custom create these automations. You can use templates that are already built. So Monday is a great tool. It's very intuitive. I think that we've really enjoyed working with it. I think we're really just scratching the surface. And so we plan to implement this both on the takeover side. So working on our takeover process. So we have acquisitions, then takeover, and then also on our asset management side. So one question that came in is who set up the automations on Monday? I think Chris has done most of those.
I've kind of a combination of all of us kind of just tweaking the model. That's a great thing about this is we all can interact and change and adapt. So I think we all kind of have a part in that.
Yeah, I think I was just in it the other night and I added like a little checkbox. I know it messed everybody up. They're like, what's that checkbox? And it was just like a way I could filter the map feature, or Eric can just go in. It's like, well, hey, I want to, get an email whenever this happens. So he can go in and add that automation. It's very, very easy. Trust me. Super easy. So let's go ahead and talk about underwriting real quick because we're going to run out of time. So Red IQ is what we use for underwriting. And if you get a trailing 12-month expense, whether it's PDF or Excel, heaven forbid it's PDF and you're having to enter it in because then you can't even copy and paste. You have to type it everything in. Well, you can copy and paste some, you can convert it. But we switched over and we did a lot of research on Red IQ. There's a lot of companies using this. So, and these are big companies. These are not just, your mom and pop syndicators. These are, big players in the space. And most of the brokerage firms are using Red IQ to underwrite. And it just saves so much time because, let's face it, anybody can type a keyboard and put in numbers. But everybody is susceptible to error because they can look at a one or hit the wrong key and accidentally mess something up. If you're scrubbing a document and doing it that way, it's a lot less prone to error. So this is a way to both streamline the data input and eliminate errors. And I know Eric can attest to this, the flexibility in looking at the underwriting. They're going to show you can just flip between like trailing 1 month, trailing 3 month, trailing 12-month expenses and how that affects the entry cap rate. So let's just go ahead and jump in here and kind of show everybody kind of how it works, like from getting a T12 and a rent roll and how you come up with the underwriting. So I'll let you take it kind of from here.
Yeah, sorry about that. It logged me out due to inactivity. So the first step will be getting the documents from the broker, of course. They'll send over typically a T12 and a rent roll. And I used to go through this and go through each column and add them all up. And due to that, there's definitely human error. This actually eliminates that, like Brandon discussed. So what we'll do is just be able to upload any rent roll or T12, which is historicals in this case. And I'll just show you what it kind of computes. So this is our most recent for the Ascend deal, which you can add more and switch through it. But it'll give you kind of these charts and some more information, great information that otherwise you wouldn't really see. So for instance, it shows the unit mix makeup. It shows the renovation status, which this was obviously a newer build, so there was unrenovated units. This is great. This shows the leasing trend over the past 12 months. So you can see how they're performing each month, at what dollar per square foot they're renting it for. And then this will kind of just show how many leases per month they're actually getting. So this is just a great way of seeing, or here's lease off burn off. Lease burn off.
Yeah, loss to lease burn off loss to lease is just your difference between market rent and what you're actually charging. So it's the loss of what you could be achieving to what you're actually charging. And so we're seeing how, obviously as a new property, they want to get it leased up, so they're charging less rent and giving higher concessions. So they have a higher loss to lease. And as that property becomes stabilized, you see it declining and becoming, a lower and lower loss to lease. And then if you go back up to the previous one, so this is going to help us on our expiration. So if we're getting ready to take over a property, so if we're buying it in June or whatever, we're going to be leasing up. So we're going to be watching for July's expirations, because they signed a lot of leases in July. So if you scroll down just a touch to that bar graph. Yeah. So you see 38 leases in July. So we're going to know, hey, July, we're going to need to do maybe a little bit more marketing. So it's helping us, kind of get ready for our takeover, even by looking at this. And this is all just compiled off the rent roll. Go ahead.
Great. So it also shows the difference between market rent and in place, or what they're actually achieving compared to what they're marketing. All sorts of different things. Occupation, occupancy. So here is the historicals, which is the T12, the income and expenses. And this is just, it shows the gross potential rents. So vacancy, concessions, and the base rental revenue. And you can see the increase over the months. It gives you the T12, T3, T1, as Brandon mentioned. And you can actually export these to Excel sheets if you want. So it's very hands-on. You can adjust the numbers yourselves, or go the original numbers. Units per dollar per units per square foot. So it's very interactive. There's a ton of information here, more than you probably need. It shows the vacancy per month and the physical versus economic, and where your expenses mostly come from in a chart right here. Let's see. So this is what the source data will come in as, just like this. So this is kind of what the T12, and then it'll auto fill. So I'll just scan through this and see if the automation has performed correctly. And then what's great about this is this actually turns into an add-in to your Excel sheet. So RedIQ will work with you. If you have your own model, they'll tailor to your model, and all it takes is just a click of a button, and this will all autofill into your model. Of course, there's things that you need to adjust, like purchase price and market, depending on per market.
And they have their own model too. So if you don't have a model, you can use RedIQ's underwriting model. But we have our very specific model, which they could tailor to it. So they had a team work with us, and Eric and Chris both worked and went over what we needed to see on there. If you could go back to that last screen where you're looking at the data and click on the highlight outliers and kind of talk about that a little bit.
Yeah, here we go. So this will just show what kind of is an outlier. So it sees the average of these numbers, and it'll say, okay, this one's kind of high. Why? It'll give you an outline of all of the things that look odd in this model. And then you can go back to the broker and be like, hey, why was the insurance 20,000 more in this month, or whatnot? So normally you wouldn't see that when you're scanning through hundreds and hundreds of lines. And this kind of just helps you pick up things that you normally would not pick up. And let's see. Yeah, and then you can export this. You can, Eric, would you like to build up on that, or Brandon?
Yeah, go ahead and show how you can export it into the model, and we'll just show that real quick. And then we'll get questions, because we got about.
I'm going to have to unshare here.
Yep, that's fine. And I know we got a lot of questions. I'll try to get to those. So I just want to show how to jump into, how it's going to look in our model and how that. So, I mean, that right there, I know that's like drinking from a fire hydrant right there, because that was a lot of information. And it took us a while to wrap our heads around it. We did a lot of demos. We met with them. We talked to people that use the system. And then we worked with them. And it's not cheap, but it's well worth the price. It's helped us tremendously. I would say we've at least doubled our acquisitions this year, last year, obviously because we have 2 great team members that are working now, but also because we have the system. That's right. I could never do it without these guys.
So this is the add-in. So it's just a button in the top right hand. I mean, you just download it from the internet and you have a password sign in, and then this is what kind of pops up. So here's a send. You'll just click that, and then it auto populates. So it will give you the most recent rent roll. You can obviously adjust that if you would like, because there's multiple rent rolls that usually come out. It will give you the source data of the historicals, so that'll auto populate, and then you can go ahead and just press populate, and you can see our data tables are loading. It might be slow because we're on a Zoom call here.
Streaming, but yeah, you can see how it's starting to fill in already.
So great. So it gives you the name, the number of units. This is all the historicals or trailing numbers. So the income compared to the expenses. And what's great is you can filter through this. You can do 6 months, you can do trailing 3 months, you can do trailing 1 month, or you could do year to date.
And you can do that on revenue and expenses separately. So you could do like a T3 income and a T12 expense or whatever. It's flexible that way. So you can look at it any way that you want to. And same thing with other income. So especially on a lease up deal, Eric, talk to us a little bit about, how that makes a difference on a lease up deal. Like, why would we want to look at a T1 instead of a T12 on a lease up deal?
Yeah, so we look at a lot of lease up deals, and if you're looking at a T12 on a lease up deal, vacancy numbers and your concessions numbers, as you can see right there, even the trailing 3 is a little bit less accurate than what is actually happening at the property. So if we go to a trailing 1, you're able to see a little bit more accurate picture of what takeover might look like, kind of where the concessions are actually trending now, as opposed to where they were when they were first leasing up. So it's just a really dynamic way of being able to look at the data that actually will help you make a decision, as opposed to just looking at data to look at data. This actually helps you kind of narrow down and build your pro forma based on how the property is actually performing.
Awesome. Well, let's go ahead. I know that was a lot and there's no way we could cover everything, but we just want to show you kind of what we do and how that's helped us. So that was a basic overview. This is our model and how we go about our process. So let's jump into some of the questions real quick. One thing is, I know, are the recordings going to be available? Yes, they are. It takes a little bit to render those, and then you'll receive an email, if I'm correct on that, Melissa. Is Monday a cloud-based platform? Yes, it's SaaS-based. It's not, something. So it's changing automatically. So Chris will be working on it, and I can see things change automatically. Sometimes you have to hit refresh, but it's not, something that's just sitting on the database of your computer. So that is very nice. Let's see. That was all that was in the chat. So let's go now to. Okay, the how, where, and why did you pick the team members you did? But they're right here, so I'm gonna talk about it. But they both said they were in our circles before they worked with us, right? Both of them had that experience. So, you're in the MFIN group right now. You're listening to the webinars. Go to the meetups. That's how you will get involved in groups. That's how Eric and Chris got involved with PassiveInvesting.com. So we became aware of them through those platforms, and then, just gradually it morphed into now they're full time with us. And that's how it's going to work. If you're not putting yourself out there and you're not active in the space, then don't. And also, if you're looking for people, if you're not out there active in the space, the MFIN family is a great base to find professional people. So use the tool that we have, especially at the MFIN Summit, which don't forget to, your time's running out to use that code webinar 77. But if you get the VIP ticket, you can interact, and you can even say, hey, I'm looking for an analyst or an acquisitions lead, you can get people right there. So that's kind of how we did it. And then we do the interview process, and they both can attest to that. We do the Wonderlic test, and we go through the interview process. It doesn't matter if we knew them prior or not. So let's see if we can get some more questions here. Again, the recordings will go out. So cost of the software, Monday was pretty cheap. I think I paid for that personally to get it started because I was trying to vet it out. I think I still am. It's not even coming out of the company. So it was very low for Monday. I think it's like $20 a month or something. It's very cheap. Red IQ, I want to say, and Eric, can you remember what the cost of that was?
I think it was, I want to say 10.
Yeah, it was about 10.
10, and then the add-on for the customized model too is another like couple $1,000s, right? Because I think total was 12, somewhere in there.
Yeah, 12 or 13, I think was what we ended up at.
And that's a flat fee. There aren't seat charges, and that is an annual fee. But I wouldn't do it without it for sure. It's well worth the cost, and that's you're paying the same thing for like CoStar. So it's the cost of doing business. It's an investment, not an expense. Have you found it necessary to verify CoStar's rent comps by secret shopping units yourself? Eric, I'll give that one to you.
Yeah, CoStar is a good starting point, but if we're getting kind of further on in a deal, we will always do kind of a secret shop. Chris and I are good at acting as potential tenants. So we've done that multiple times, and we're getting pretty good at that. We've got our stories down. But sometimes you just call the complex, you don't have to personally visit it, but just act like a prospective resident, see what they're offering, say, it might be a 1-bedroom or a 2-bedroom, but it might have family. So what's your price for the 3 as well? Just try to get all the information that you can get, just as a way of verifying CoStar.
Yeah, definitely. And because CoStar is going to show you market rents, but it's not going to show you your loss to lease or any kind of concessions. So you definitely have to double check that information. Chris, on Monday, are all the fields manually entered, or are some auto populated, either from CoStar or from automations that you built in?
Nothing's automated from CoStar. I don't know. I don't believe they have an integration. That would be something that we can actually recommend. I've recommended things in the past, and they've listened and tried to implement and adjust for us, and they have. But a lot of stuff is automated. So the dates are all automated. The due dates are automated, which helps us keeps a track of when things need to be done. But all the information I input manually, and that takes me less than 2 minutes. It's a very quick process, especially once you've done it a couple hundred times.
Yeah, exactly. And then I have a question on preempt. Does preempt mean that you submitted a bid outside the normal process? And I'll take that one. Yes. So this was a fully marketed deal with a CFO date. We jumped on this particular deal immediately within the first week. And because of our system, we were able to get it all vetted very, very quickly. And we submitted immediately, right away, over asking price. If you're going to preempt a deal, you're going to have to go over asking price, usually 5,000 to 10,000 over on a per door basis over the asking price. And that's what we did here with non-refundable earnest money day one, because we're an unknown group, but we knew the underwriting looked amazing, to the point that sometimes the underwriting looks so good, you're like, what's wrong? Like, is there a problem here? And then we double, triple check it. We send it to everybody. Danny, look at this. Brian, look at this. Dan, look at this. Make sure we didn't make a mistake here because the returns look so good. And we have a lot of room to run. So we had room above what we offered, but we were able to offer over guidance. So we went and go ahead and jump on that, because right now in the current market, stuff runs because there's 1031 groups or family offices that don't have their cost of capital is lower than ours, and they can pay more for it. And, prices are just going crazy right now. And so we want to go ahead and take that off the market as soon as possible. We just did that yesterday on another deal. So that's a strategy that we use. Actually, we did that with our Charleston deal too. So it's a very effective strategy. You know, you have to know what you're doing, and we vet the underwriting 100% before we do so, because what you don't want to do is preempt a deal and then make a mistake and have to back out of it, because then you lose credibility with brokers. What is the CRM platform name? That's actually our CRM platform that we use for the broker side, is just within Monday. It's a Monday CRM, but it's a very light CRM. I'll go ahead and say that we don't use the same CRM for, like, say, investor relations. We use I think it's Constant Contact for investor relations. And then on the technology side for investor relations, we also use IMS, which I think was just recently purchased by Yardi, I want to say. But as far as like investor management, so we use technology across the board. Active Campaign, yeah, that's right. Sorry, not Constant Contact. So Active Campaign is what we use for our CRM for our investors. But we don't find that we need something so robust for our brokers, because we're not sending them out like, you know, cute little newsletters and, you know, stuff like that. It's just, we want to keep track of kind of what deals they are associated with and what markets they're in. We can filter them that way and know, you know, when we were last contacted. That's basically it. So that works for us. Is RedIQ related to RedX technology? I don't know the answer to that. I have not heard of RedX, so I wouldn't be able to answer that. But all right, guys, that is all the questions that we have, and that's also all the time that we have. And Ray, you're welcome. We're glad you could join us. I know he's got to jump off. So thanks, Chris and Eric, for joining us today. We appreciate you taking the time out of your busy schedule. I know we're working on several deals. We were on the phone earlier today and last night and all day yesterday. So we appreciate everything that Eric and Chris do, and we appreciate you joining us today. So if you have any questions, we're always available. Feel free to email us. You have Eric at passiveinvesting.com, Chris at passiveinvesting.com, or Brandon at passiveinvesting.com. We're more than happy to help. That's why we're here. We don't believe in a poverty mindset. There's plenty out there for everybody, and we want to help you accomplish your real estate goals and dreams. And so if we can help, be sure to reach out. In the meantime, next week, we will be talking. Let's see if we got this, how to raise money for your real estate syndication. Let me go ahead and put this up there. That'll be with Dan Handford. And so you will learn at this webinar how to get your mind right first, where to find money, basics of SEC rules and regs for raising money, steps to build your credibility, and so much more. So be sure to be here next week, and we appreciate, again, you joining us, and I hope everybody has a productive day. See you later.